We have been very positive on Nvidia. We bought it down when it hit nearly $100 in the fourth quarter last year, and then it tripled as some of our other AI-oriented stocks stood still. So, we're looking at, believe it or not, many people do not believe this about us. We're looking at relative valuations of names in the AI space. And we were looking at Nvidia at 25 times sales, which is where it is.
ARK Invest CEO Cathie Wood shares her cautious stance on Nvidia. During the discussion, Wood delves into her thoughts on the U.S. debt impasse and provides insightful commentary on the future prospects of inflation. Tech company Nvidia has come out swinging as an emerging artificial intelligence leader in recent days, but ARK Invest CEO Cathie Wood allegedly saw their potential back in 2014. Cathie Wood explains why Nvidia stock exploded and what the real AI play is. Nvidia stock soared as much as 30% on Thursday after the company announced jaw-dropping guidance as it benefits from a wave of demand for its chipsets that support generative AI technology platforms like OpenAI's ChatGPT and Alphabet's Bard. But the active investment manager, who has owned Nvidia on and off since the flagship fund's inception in 2014, missed out on massive gains as it started to pare down its position in Nvidia, heading into a 52-week low in mid-October. While there are no pure-play AI stocks, as all the publicly traded companies heavily involved in AI have other business offerings, Nvidia has come to be considered one of the leaders in the field despite being in a similar position. Wood pointed out that AI hardware spending is expected to reach $1.7 trillion by 2030, while noting Nvidia's sales base this year is only estimated at $40 billion.
People who understood the Nvidia story, we were pounding the table on it on 2014, really till 2021. And many people actually put it into their portfolios, their own portfolios, and they may have held it. We have not gotten much pushback. And the reason is people know that we are on AI, but we're doing it in a little bit of a differentiated way. Nvidia has become a check-the-box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise. So we're just pivoting to another set of plays that most people have not discovered yet, much like they did not understand that Nvidia was an AI play really until very recently. Anything for a price, I would say. If this cycle were to worry, we tend to think we're going to have a harder landing than most economists do. If the cycle were to hit it, and Nvidia surprisingly gets hit very hard by cycles because the inventory buildups, and I would say we're in one of those right now, are so spectacular. If we have a combination of a correction and the recognition by the marketplace, perhaps, that some of these models don't have to be as large and don't need as much computing power as more companies use more specialized models. You get the confluence of a reality check. Nvidia is just a very powerful company. They are so exquisitely positioned in the space, but you're paying for it now. The frustration yesterday was another one of our AI plays, UiPath, reported a quarter and revealed some products, AI products, and really opened the kimono a little bit more in terms of what it is doing on the AI front. And it's going to be one of the most interesting plays out there, I think. It was down 10% after beating numbers because it talked about the economy being somewhat variable, I think is the word it is using. It was focused on the macros, and that's what analysts focused on. Now it's having a good day. It's up about 10% today.
According to Cathie Wood, Tesla has more real-world driving data than all of the other auto companies and tech companies involved in trying to get into this platform opportunity combined. Wood says the credit crunch is going to get much more serious than most are expecting. She believes that markets are wrong to fear inflation and the bursting of the tech bubble. Wood has been bullish on the economy despite ominous warnings from other Wall Street commentators. Last year, she said deflation was becoming a bigger problem than inflation and has gone on multiple tech and growth stock buying sprees in 2023 as the market rebounded. She remains bullish on her long-term bets, which include Bitcoin and Tesla and the future of Twitter and ChatGPT.
The autonomous taxi network that we believe Tesla is building. It has more data. Talk about proprietary data. It has more data of real-world driving miles than all of the other auto companies and technology companies like Waymo put together around the world, we would say, except for perhaps China, because we don't know exactly what's going on there. And we do believe that the autonomous taxi platform opportunity is a winner-take-most opportunity. The company that gets a person in an autonomous vehicle from point A to point B as quickly and safely as possible is probably going to get the lion's share of the market. And that company will, in the United States, we believe, be Tesla. And we believe globally that opportunity will scale from zero today to $8 to $10 trillion in revenues by 2030. So you can see why we're so excited by Tesla. It is the furthest advanced from an AI point of view, and it's even becoming a manufacturer of factories using artificial intelligence and becoming more and more and more efficient in manufacturing factories and cars. We think it's the most efficient in the world right now. And I think when history books are written, we'll look back at this period and we'll see the sharp rise in inflation, which was caused by massive supply chain, really supply shocks from COVID and the war in Ukraine. And you will see, so sharp increase, and it feels like it's so slowly coming down. But when you start looking at these charts in history, this decline will look very like it was very rapid, and we will descend into deflationary territory. Don Luswin wrote a piece, it was an editorial in the Wall Street Journal, I believe, about this. And I think the Fed is going to be blamed for sending us into a deflationary period. Already we're getting negative signs for guidance. Home Depot, its same-store sales down 3 to 5% for the year now they're expecting. We got GDI, which is the other side, so gross domestic income, which is the other side of gross domestic product. And they need to equal, but they're at a record gap right now. It's been negative, so in recession territory for the last 2 quarters. And I think many companies are going to feel a hard landing, and it's going to come both from units and prices. I think more and more companies are reporting this on their earnings reports. These economic statistics that take all the oxygen out of the room are hugely lagging, and they're not even getting it right. If you look at the digital world, gross domestic product that statistic was devised in the industrial age. We're in the digital age right now. So we pay more attention to gross domestic income, which tends to be more accurate as we're seeing these inconsistencies.
Investors displayed a positive outlook towards Advanced Micro Devices Incorporated. This sentiment resulted in an impressive 11% surge in the stock price on Thursday, further contributing to the remarkable 87% year-to-date increase. Nvidia has played a significant role in driving technological advancements over the years. The future is expected to be shaped by companies that effectively harness AI capabilities with extensive datasets. This concludes our discussion for today. Do you agree or disagree, and what are the reasons for your stance? We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for watching.